Welcome one and all to our CPI live show. Today we have James Garis. James, how are you today?
I'm doing very well, thank you. We're a couple of minutes out from the US inflation data.
Yes, very excited. Can you give us your thoughts as we get ready for it?
Yeah, for a quick rundown, obviously we have the 4 different bits of data: CPI year on year and month on month, core CPI year on year and month on month. Now today, the only data point that matters is the core CPI month on month, and it's expected at 0.2%. So forget about the rest of them. Fed's Williams said that he will consider rate hikes if the monthly core inflation runs above 0.2% in the second half of the year. And Fed's Waller has been a great kind of leading indicator for this since 2021. He said they won't want to wait a long time to basically raise rates. So at the moment, there could be a rate hike in July. And if the data today beats forecast, the probability of that rate hike for the July meeting will go above 50%. If we do get data below what's expectations, we'll probably see the odds for a July rate hike drop and it'll be pushed back to September. So all eyes are going to be on this data, especially the core CPI month on month, obviously in less than a minute. We've got about 10 seconds to go. The squawk is on and you should be able to hear it come out, but we're looking for core CPI month on month above or below 0.2.
Free spot 5%, free spot 5%, lower than forecast of free spot 8%. Month on month, minus 0.4%, minus 0.4%, lower than forecast of minus 0.1%. Core year on year, 2.6%, 2.6%, lower than forecast of 2.8%. Core CPI month on month,
0%,
lower than forecast
0%, lower than what was expected. We're seeing the dollar
in the US dollar off
on
the back
that
of this
news.
data.
So from the back of what I just told you, I said if we got above 0.2, it means the Fed would have to raise rates in July. The data come out as 0% compared to the 0.2 that was forecasted, and that puts a July rate hike off the table. The July rate hike will be pushed back to September, most likely, but we're seeing the dollar come off on that news. We'll see indices gain. You'll probably see gold gain as well, and maybe a bit of a shift to a risk on mood, although I doubt the risk on mood will be as strong due to the overwhelming geopolitical tensions that we're still seeing. But as for the news, the data was lower than what was expected for the core CPI month on month, the data that mattered the most. But across the board, it was lower than what was expected.
We got on the top left, we have ES futures, S&P futures sharply higher, opposite direction on US dollar, and then gold. What a move in gold, back up to 4,100, and finally NASDAQ also shooting higher. Woo. My goodness,
massive data across the board, all lower, quite a bit lower as well. Really for CPI month on month, it was minus 0.4. Forecasted minus 0.1. The year on year was 3.5 versus the 3.8 forecast. And as I mentioned, the month on month core data was 0 compared to the 0.2. The core year on year 2.6 versus 2.8. So across the board, lower than expected. And like I've mentioned, that pretty much puts a July rate hike completely off the table. The odds were about 50% before the data. It will probably drop to 20% or so, 25% after this data now, and that's obviously the repricing in interest rates that you're seeing on the screens right now with the dollar dropping and the riskier assets going up.
Incredible. I mean, I knew everybody was waiting for this, James, but this is the 10-year yield. Like you said, interest rates are a lot softer after that CPI print. Crude, looks like crude's still trying to push a little here, but Bitcoin as well. Bitcoin's moved back above 63K, approaching 64K.
Yeah, huge day. I haven't seen a big miss or beat like that in inflation data. It feels in quite a while, especially to the lower end of the spectrum, where obviously all the data is coming lower than what was expected. So that's massive, and again kind of throws a bit of a spanner in the works for the Fed, because obviously Kevin Warsh, the new chair of the Fed, just came in and had a bit of a hawkish stance in his first press conference and said that we will probably have to raise interest rates in September, but maybe July. And obviously now the inflation data is able to kind of go against that. And they probably will still raise rates, but it's definitely not going to be this month. That's for sure.
Yeah, this is definitely pushing it. Probably September. I know they take a bit of a break. You always talk about the 6-week cycle, James. So no August meeting for them. But we do have Warsh speaking in about hour's time, I believe. He's going to be testifying before Congress. So hopefully he can continue to do a bit of a pump as we get ready for the day.
Do we know what he's testifying about?
I believe so. Off the top of my head, I believe it's part of his. He has to do a biannual update to Congress. I think they're going to try and pressure him about what's his forward guidance. What does he see rates doing? And I think it's one of those like, please present to the class what your plans are. And it will be broadcast, I think, on YouTube as well.
Yeah. I'm just checking if there was any other Fed speakers for today. I know we've just had a couple of comments come through from Warsh actually, as well as a few others. But we have had some comments from Warsh in the last few minutes that job creation has kept pace with the workforce. The unemployment rate is low and has changed little over the past year. Solid growth in nominal wages. This is the report now, the report to Congress now.
So I believe it's at the top of the hour. So I want to say for us in London, British summertime, I think it's either at 2 o'clock or 3 o'clock. Let's see if I can. I think it's at 3 o'clock, So in 90 minutes, a football match worth of time. 90 minutes from now, Warsh will be. Oh, here we go. Got it. So Warsh is going to be coming out. This is the update here. And we got it. Yeah. So it's 10 a.m. Eastern time.
Right. Yeah. These must just be comments from his statement then, because on the Squawk, I've got the semi-annual monetary policy report to Congress. And sometimes their statement is actually released earlier and then they obviously speak it to them. So if you go on the Squawk here, you can click on this and it obviously takes you through the
amazing
part of the statement. So here's some of the comments that have obviously just come out from that. But this would have been pre the CPI data. So this won't include anything obviously about the inflation data that's just came out. But as you can see, traders are reducing their wages on the Fed rate increase this month. And the super core data was a lot lower as well. So great data, really. Great to obviously get the markets going on this Tuesday afternoon, and some nice moves obviously before the US Open. So it could be a pretty busy New York session.
Yeah, I'm ready for it. I was waiting for some sort of catalyst, James. And the week I think it's going to be a busy week regardless. We had some really, really shocking earnings news out of IBM this morning. So that was basically, as they call, shat the bed a bit. Down 22% on IBM this morning for anybody who trades individual names. Terrible, abysmal, shambolic. I think the thought is AI is going to cause IBM to become a dinosaur. So yeah, it's going to be a good day, I think. Good day for markets.
Yeah, I did see that. I did see that pop up, but I didn't read the report. I just saw a headline flash about IBM being down 20%. Yeah. So it's good to know why.
Yeah, there you go. Any other things before we wrap it up today? Any other sort of points you wanted to maybe people to be aware of?
I mean, I think if I had any points before the call, then points would have changed now, obviously, because of the data.
True.
I would just see how this potentially changes the risk sentiment. It'd be interesting if we got comments from Warsh or anyone else in the Fed like this afternoon. But I'm not too sure if we will in terms of like them being related to inflation data. But now we've had that data and obviously we are getting a repricing in interest rates. It would really just be, again, to keep your eyes on all the market correlations between the yields, the dollar, obviously then your dollar FX pairs and also the indices and gold. But it seems like it could be a bit of a good day for the markets, hopefully. I mean, Nasdaq's up about 1.5% pre-market, which is always a positive sign. So maybe, just maybe, we get a bit of or maybe we've seen the low in the indices for now, and maybe we can get a little bit of a rally. It'd be nice to see Nasdaq try and push above that 30,000 again, and push back towards kind of 30,500 and on towards all-time highs. But I don't want to be too ambitious on a bullish stock market, because really it's gone nowhere in about the past month. It's been a pretty sideways trade, really. I mean, I think the price we're at today is pretty much where we was at the start of June, and also about mid-May as well. So in the grand scheme of things, the market hasn't really gone anywhere in the last kind of 4 to 6 weeks. But it's understandable considering the risk sentiment that obviously we've had in the markets and the constant ebbs and flows of positive and negative war news.
Yeah, and I think that's what's really been trying to like grinding us into this sort of like consolidation mode. Like you said, we've become closer and closer and closer to the point. Eventually, I feel like something's got to give, and we're going to have some sort of exit strategy. Like you said, the CPI, the initial reaction has been higher. So let's see, today could be the start of something pretty big.
Yeah, it definitely could. And that's why I think we need I think the next thing after that data is some comments from obviously Fed members to kind of solidify, oh yeah, we won't be cutting rates we won't be raising rates in July, you know, and obviously give a bit of their forward guidance for the future. So I feel like that's the next thing that traders should be looking out for and just be paying a bit of attention to.
Yeah, I think that announcement. So I have a feeling that when Warsh speaks in just under 90 minutes, just over an hour, I believe that he's going to have to address the inflation, the elephant in the room. So I'd be keen to see what he does say. I believe it's going to be a pre-prepared statement, and then it's going to be a Q&A. Sort of deal. So yeah, let's see what he says. He may give us that lift off that we're waiting for, to get us out of this consolidation that we've seen. Been kind of tough to trade.
And that's him speaking just after the US market opens, right? About half hour after.
Yeah, that's exactly right. So not only do we get CPI, but we also get Warsh. So it's a jam-packed day today.
Hopefully Warsh gives us something, because otherwise I might end up start missing Powell, and I never thought I'd say that.
Well, you know, when you get used to somebody for so long, you know, it takes a while. But yeah, let's see what he gives us today. I think we'll be keeping it very, very much tuned in for the whole day. So I think that's it for today. James, always good to have you on the show. If anybody wants to get more information on the terminal, can you let us know a little bit more about the terminal, really? How people can do that?
It's got everything in there that you need to trade the financial markets. Daily macro playbooks, the live headlines and the scoop, where you get all of the news from the news feed with news updated from all the top financial news providers every minute, all the trading tools you need, whether it's risk sentiment, institutional reports, interest rate expectations, and a lot more community resources as well. So you can head over to terminal.macromarketsgroup.com and check out all of the information if you are looking for more tools and resources. But instead of grabbing it from all these different websites, it's all under one portal, all under one platform to help you trade.
Brilliant. And I use it as well. I use it every single day. So check it out. The Terminal is the name, and it's everything you need in one place. Exactly right. All right, James, that's it from us today.
Good little quick one. I hope everyone kind of got a bit of insight on that from CPI, and I hope it helps them into the US session. I think we're gonna have a busy one to really get this week going. So good luck for the New York session, everybody. And thanks, Mandela, for having me on.
Of course, anytime, James. Be safe out there, everybody. And hopefully the CPI show has helped you to prepare for your day. Take care.
Take care.